Like that's why USDT is the centralized exchange liquidity pair. That's the problem it solved, right? USDT made all of the BTC and crypto pairs on centralized exchanges way back in the day trade instantaneously.
You're going to get a lot lower slippage. You're going to have a lot higher efficiency. These on-chain forex pools get flow, so they're very happy. And the only one who loses is the existing giants of the payment processing world.
From my perspective, it's not really an L1 that's poised to gain a lot of settlement volume. They're going to be doing it on their own accord. But what this does show is that we're going to get composability between the regulated markets and the DeFi markets.
I just can't help but think Tempo is going to mod all these, and that Tempo is coming straight for all of the payments chains, and I'm scared. Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Gentlemen, welcome to Stabled Up, episode number 13, our premier weekly stablecoin show presented by our good friend Frax. We happen to have Sam on the show today with Rob Montgomery of InfiniFi. Guys, a lot going on in the stablecoin space. We've got Standard Chartered news. We've got DTCC news. We've got Kwon news. We've got a lot going on. Sam, Rob, welcome back.
Thank you, guys. Hey.
Always a pleasure.
It's good to be back.
All right, guys, where should we start? You want to talk about Kwon a little bit now? Go.
Yeah, I think we have to talk about Kwon.
You guys,
I just did the math for you. So, Andy, that 40,000 you lost.
Yeah.
So Kwon is the 15 years he's spending in prison. Every 7 minutes is equivalent to that 40,000.
Wow.
Yeah.
Wow.
That's how much money he lost.
In terms of like the total market cap that he, the $40 billion,
you convert it back to minutes. Every 7 minutes, he's paying society for $40,000 that he lost.
Wow. Sam, I got to think you got a UST story over there somewhere. I don't know how much you want to share, but I got to think you were in the trenches, man.
Oh man. I don't know if this is the best time now that it's all the book is thrown and all this stuff, but I think it's a good time to put some of it out there. As people might or might not know, now it's been years, right? Frax is and was back then the second largest, essentially, like decentralized, like quasi, like hybrid algorithmic stablecoin. Now, we have our Frax USD Genius compatible stablecoin. In fact, I would say that event really shaped us to create a safer stablecoin as our flagship product rather than a decentralized one. The way that I would actually put the collective consciousness of the industry is until Terra blew up, right? Everyone in crypto from like early 2018 ICO era and like Basis, if people even remember that name, Frax and then Terra, were trying to find the holy grail of stablecoin design as like this hybrid algorithmic kind of stablecoin that has all the best properties of Bitcoin, right? It's decentralized, it has no blacklist, it's all on chain, it doesn't need a bank account to work, but it also has the USD unit, where the unit that everyone needs, wants, they do their accounting in and all this stuff. And the holy grail stablecoin, design of algorithmic, scalability, and the stablecoin trilemma, if you guys remember, was like, this is like, did Terra solve it? Did Frax solve it? Maybe like someone else can solve it. And then it imploded with, like you guys said, 40 billion of capital wiped out. And it was like, no, actually, maybe the best design for a stablecoin is an extremely safe digital dollar. And that's just what a digital dollar needs to be on the blockchain. Is it does need a bank account to work. And for real decentralized assets that people want to be fully non-custodial and fully in the crypto ethos, you have BTC and ETH. So I think that's an important caveat that actually left in people's minds. But where should we start? The four pool, the other pools, the UST backstory is like, I'm a multi-saga volume book of, you guys can open wherever you want on whatever chapter.
Yeah, I think the four pool on Curve is particularly interesting because that was the initial tell that UST was having some issues. So this was like in June 2022. We saw that the balance between UST, USDC, and USDT in the three pool started really getting imbalanced, and that's when like the sirens started going off on Twitter. So maybe we can start with some of the four pool. You were pretty deeply involved. Like, did you know before other people? Like, how did you see this play out? How did you manage risk for Frax? Just talk to us a bit of like the war room stories there, whatever you feel comfortable to share.
Yeah. First of all, it was May 2022. And no, we actually had no idea. It was equally as surprising. In fact, I would venture to say it was more surprising. And like the entire thing was basically literally in an instant, right? When you look at the chart, it's like the crazy DeFi charts. It's like, right, just straight up, straight down. And the interesting thing about the whole like Terra saga is that I think unlike FTX, everyone kind of understood that this is how it worked, but that it like didn't it shouldn't work in a pure, in fact, like it shouldn't work at all. Right? Like how did it even get to that far? And that's pretty much I think the point of the whole story, that people are like it had to be some kind of lying and things like that to get people to be there. In fact, Frax's entire premise with the original design is that a raw algorithmic stablecoin does not work. Like do not actually go in that direction, because that is absolutely ridiculous, right? And so our actual premise of like existing in the original design of the first product that we built was that literally this is the one that's the raw algorithmic stablecoin is crazy and it's not going to work, right? And so I guess we saw that unfortunately in May 2022.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Looking for yield that stands out? InfiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. InfiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Yeah, we did. Well, Do Kwon's got 15 years now. He's going to serve half that sentence in South Korea, half of that, the first half in America. Kind of the end of a chapter there for the industry. And the kind of SPF's behind bars, Mashinsky's behind bars, Do Kwon's behind bars. That's it. I mean, those were the three culprits amongst, you ought to think a lot of people got off doing similar things at smaller scales, or not, blowing up as bad as those three. But there's always the scapegoats, and those are the guys that got it. So let's move on to DTCC getting a no action letter from the SEC yesterday afternoon. So about 15 hours before this. Rob, maybe you can just set the stage here on your side for what this means, and then we can hear from Rob M from his side, and Sam.
Yeah, so I think first, and we talked about this a little bit before Sam and Rob joined, it's important to recognize the scale of DTCC. This is the largest settlement platform by volume in the regulated markets. They do quadrillions of volume. So we talk a lot about trillions, but DTCC does quadrillions. And now they've got clearance from the SEC to go and tokenize some of those assets. I think this is huge. I also realize that they have been building out this Hyperledger consortium chain. And so there's not really an L1 that's poised, and maybe Sam and Rob have their own opinions on this, but from my perspective, it's not really an L1 that's poised to gain a lot of settlement volume. They're going to be doing it on their own accord. But what this does show is that we're going to get composability between the regulated markets and the DeFi markets. And I think this convergence is going to lead to an absolute just significant increase in the amount of liquidity that are flowing into the assets that we have. And I do think this is going to be mostly contained to stablecoins, Bitcoin, ETH, and maybe a select few other assets that are going to benefit from this rise in liquidity. Rob, Sam, maybe you guys have other perspectives here. Would love to get your thoughts.
So I definitely agree that it's going to see a a lot more capital coming on chain now. There's a much clearer regulatory pathway for that to occur. I don't know a terrible amount about how this Hyperledger setup is designed. What I do know is that, in my opinion, most of this will eventually accrue back to ETH L1. However that's done, synthetic bridging, various people, setting up their own bridge between the two. I think you eventually see it trickle over to ETH just because that's where there's the most liquidity currently. That's where there's the most long-term, support and stability. People are kind of getting tired of the L1, the L2 games, and they see that, this really is the biggest store value, the most secure venue for these sorts of things to be executed on. And I think the main impact for the world that I'm in, at least, is going to be that we're going to see a lot more RWA lending and borrowing against these assets in this next year. For me, at least, with InfiniFi, that is very exciting for what we're doing, because one of the new yield sources that we're aiming to tap into in 2026, in addition to various different lending products that we're exploring, is both the direct subscription to and the liquidation of RWAs. Direct subscription to, obviously, we can make a pretty good yield from putting money into these things and creating almost a sort of hybridized structured product where we're earning the yield on them and able to scale our returns that way. But also the liquidation of is really interesting to me because it's a completely unsupported part of the sector right now, and that there's not a lot of people who can warehouse the duration on these assets. That is to say, when you have an RWA that's been tokenized, it usually has some sort of a redemption period associated with it. Most people are not going to set up curb pools on these assets. And so you need somebody who, during a liquidation event, can come in, buy that RWA at a discount, warehouse the duration until that redemption occurs, and then pocket whatever the spread was on that liquidation. InfiniFi is purpose-built to hold assets to maturity. That's our entire line of business. And so with the scaling in this, we become one of the linchpins to facilitating that scaling. And we can also make a very, very large amount of spread off of that. We're talking like 40% average.
Yeah.
On sorts of liquidations.
It's actually interesting here, guys. On that note, Rob, it says DTC is authorized to offer a limited production environment tokenization services across L1 and L2 providers. DTCC will provide more details about onboarding requirements, including registering wallets, as well as the approval process for L1 and L2 networks in the coming months.
So, like one thing I want to just say about DTCC for viewers that aren't familiar, they literally hold and settle 99.99% of US securities. And this is just a funny fact to just like think about for a second, is like, how did regulation get us there where there's one private company that literally entirely settles 99.99%? I think it's like something like over 100 trillion or something of, because every single stock in the entire US stock market, and then most of bonds, like literally the story is that the physical certificates, when like they used to trade them on the actual New York Stock Exchange floor, when things started to get digital with like actually like tapes and then later the internet and stuff, literally DTCC held the physical stock certificates, and then they would move them around instead of just literally hand by hand every single trade. But it's just really funny that regulation, right? Like the SEC, all of these things that were like, oh, it's like, orderly markets for competitions. Well, it's like, well, here's this example in the settlement arena, right? Where there's one private company. You could maybe say this needs to be a public good. It needs to be like nationalized, owned by the US government or whatever. But this is a private company that literally does the entire settlement, not the vast majority, not like a sort of monopoly, but the entire thing. And so what's interesting to me with this tokenization stuff is, how will the tokenization actually look? Will it be like the same way that they do paper certificates and like tokenize them, like kind of, right, in the digital aspect of settling them between like broker dealers and things like that? Or is there some way for them to free float around freely in these L1s and stuff like that. And one thing with us at Frax is we're an issuer, obviously of a stable coin, Frax USD, but we also have our Fraxtal blockchain. And one of the interesting things is if these stocks are like whitelisted, like restricted, if we can actually get the Fraxtal like chains proxy bridge right on Ethereum actually whitelisted to move these assets there because the chain is by a issuing company, then those could be traded on Fraxtal chain. They're not literally securities. They're obviously representations of the securities, but they are literally backed by the DTCC's like own securities token, which is literally how the US financial structure works, exactly in that way, right? And so we've been thinking a lot about how to get really good pairing of like Frax USD liquidity against these new assets, because that's where we think the market is actually going, right? Like if you think about why Tether is so big, USDC is so big, they are the pairs, they're the liquidity pairs for their generation, right? Like that's why USDT is the centralized exchange liquidity pair. It actually, that's the problem it solved, right? USDT made all of the BTC and crypto pairs on centralized exchanges way back in the day trade instantaneously, instead of having arbitrageurs have to send wire and then withdraw it 2 days and then send it to another exchange plus 2 days and then try to arbitrage over 4 days prices that move in crypto 365 24/7. Tether made them immediate. You withdraw the Tether, you send it there, right? And then USDC did that for DeFi. Well, who's going to do it for this next generation of stocks, bonds, as Rob said, like assets that have duration? What are the liquidity pairs there? And I think we have a really interesting few things to release in Q1 that will answer that for Frax USD, our own stablecoin.
Yeah.
Very, very well said. And Sam, I just want to fill in one thing that you mentioned there, which was essentially this stamp of approval wherever the financial security goes, whether it lives on DTCC settlement network, their own internal blockchain, or if it starts to permeate into the DeFi ecosystem. That stamp is called the CUSIP. It is a 9-character alphanumeric code that identifies a North American financial security for the purposes of facilitating clearing and settlement of trades. And so this is a regulation standard that obviously DTCC has, and they've internally done it for their own settlement engine for 99.9% of the financial securities that are out there, hundreds of trillions of dollars of securities. Now that same stamp is going to apply to assets that will start to permeate into the blockchain ecosystem.
Yeah. Tokenization, man, it's happening. And it's happening globally. Sam, you also, in your kind of outline of the Frax suite, you didn't mention Fraxnet, but I wanted to ask about this Korean won stablecoin that you guys started to collaborate with from basically trying to make the Forex on-chain market more liquid, more available, more kind of transparent, global. So you guys recently announced that you will be working with KRWQ Cash, which is the most traded Korean won stablecoin. And so they will be joining into your Genius compliant stablecoin network. I'm curious how you think about this Forex market, and from both of your perspectives, how big this can really get, right? So obviously we've seen the proliferation of US dollar stablecoins. I think next year is going to be the year of non-US dollar stablecoins. There's 5 or 6 European banks that are getting together to launch their own European kind of like mandated the Euro stablecoin. It's looking like the end of summer next year. Obviously, KRWQ is on track for Korea. We were with Fede and some of the guys in Buenos Aires a couple weeks back. They're launching an entire slew of stablecoins for Argentina, Brazil, Colombia, Venezuela. I just think next year is the year of the non-USD stablecoin. How do you both think about Forex on chain? How do you both think about bringing this massive market on chain? And how do you kind of see that happening?
Yeah, for sure. So the KRWQ Korean won stablecoin is by the IQ team. Frax is the issuance and infrastructure provider for it, just like how we're doing stablecoin as a service for mostly USD, but a Korean won stablecoin is exceptional. And we've integrated it into Fraxnet, our neobank layer, where people can sign up, have wires in and out, stable coins like Frax USD, but also soon KRWQ, which is super, super cool. I think that exactly what you said is true, where 2026 will be the year of non-USD stablecoins. I don't want to make this mistake that I made with prediction markets. Prediction markets, I've been in crypto since 2014. Every single attempt, Augur was the first Ethereum ICO, then there was like Omen, and then there's a bunch of others that I don't even remember, but every single time people tried it and it didn't work, people were like, oh, prediction markets are a niche thing. Maybe they'll blow up every 4 years because of the, worldwide kind of event that everyone pays attention to, which is the US election. And then actually Shane at Polymarket was like, no, hold my beer. It's actually the biggest thing on the entire world, right? And so I think that, everyone keeps sharing the chart of like 99%, USD stable coins is like the stablecoin dominance. I think like it'll still obviously be like 80% dominance, because that's literally what the dollar is right now, 80% of global trade. But that means that non-USD stablecoins will 20x if it even looks anything similar to the global trade of the classical, analog assets before they were tokenized, right? And so it's going to be huge. Particularly Korean wons are actually, if you didn't know this, last year, they were the top trading asset, even more than USD. They were the most fiat trading asset because all of Korea trades against Korean won. I think it's actually like a regulation thing. And so like Upbit and Bitum and all of these Korean exchanges, they have to have KRW pairs. And so I actually think the second biggest opportunity after non-USD stablecoins is actually the Korean won, which is why we thought this was so exciting of an opportunity to be KRWQ's like issuance and infrastructure partner. But everything else is going to be growing, euros, Singaporean dollars, et cetera, et cetera. And so I think once those come on chain, we're already seeing DeFi being built around them. Like the other day, I saw someone was doing, I think it's called Autonomint, and I just saw it. I'm not affiliated at all. They are doing like carry trade with FX to get, it's like Athena, but with different FX pairs as like the collateral. This kind of stuff is going to grow 1,000x on chain. And so I think 2026 will be the year, like prediction markets, it was 2025. And so we're really excited to be at the forefront of that with Frax USD and KRWQ all integrated into our neobank platform.
And real quick there, is KRWQ then a Genius compliant stablecoin?
No. I mean, Genius only applies to USD
USD.
stablecoins.
Gotcha.
Yeah, what basically means you could go in and out into KRWQ with Genius compliant stablecoins like Frax USD, but
Right.
it is entirely Korean thing. Yeah.
Right. Rob, what's your take on this from more kind of like DeFi side? Do you anticipate these kind of tokenized versions of these non-USD assets or stablecoins coming into InfiniFi to other DeFi platforms? How do you kind of see this playing out?
I wouldn't see us directly having them as deposit assets, at least not in the next 6 to 9 months. But the way that I see this as interesting is global trade and particularly trade receivables. So the Forex market is definitely starting to proliferate on chain. And what that means is, as somebody who does duration assets, I've been on the lookout for people setting up things that look kind of like what I think Huma was trying to do earlier in their life. I'm not sure if they're still doing it, but I know that there is a market here because I did some research into it a few years ago. And the long story short is you have what's called invoice financing, you have what's called trade financing. These are relatively short-term opportunities, frequently denominated in a foreign currency, where a traditional wire actually loses a lot of efficiency because of local fees, because of inefficient forex. If it's a small denomination, like a lot of these invoices are, typically around $2,000, a $45 wire fee is going to eat up the entirety of the profits you could make off of performing that trade. But if now you're able to do these receivables financing, this trade financing using stablecoins, and if you have efficient on-chain forex that allows you to open forwards, you've created a really good duration asset that can yield somewhere between 12 and 24%, depending on what the cost of your hedge against that currency's volatility is. And I mean, this really ties back into the RWA sector. You want to know what the really most exciting avenues that stablecoins and foreign stablecoins in particular are going to be opening up. It's these duration opportunities for short-term loans to countries that have much higher interest rates in their central banks than we do, meaning that there's a lot of money in these trades. It's just not profitable to run them without stables.
Like a Turkish stablecoin, like a Turkish Lira stablecoin could be an interesting thought experiment with regards to how what you're describing, because it's so high. Or maybe like
Brazilian
Brazil or something.
Riyal was actually what I did my models on when I was looking into this like 2
Gotcha.
years ago. It was
Yeah.
showing 24% APR.
Yeah.
And you try to run that with a wire fee. You're talking about a $45 fee for an international wire. Your average receivable is $2,000. What you're doing is you're basically like someone's going to deliver goods with their truck for the next month. They deliver the goods. They get paid $2,000 with an invoice. That invoice won't be cashed in until the end of the month. They need the money now to go make more deliveries.
Yep.
You front them, $1,800. You're making 24% off that, 36% in Brazil. But if you got that wire fee, that kills your profit. $45 is 24% APR if you're having to send it every month.
And the time cost of money too, with the couple of days in between as well. Because usually those people want the money like now. Like the whole point is so that they can reinvest into their business or go pay their suppliers or whatever it is.
And if you've got really good on-chain Forex, you can automate pretty much the entire thing.
So, Robbie, we heard from Luca from M0 and Hanoan from Codex about what, like, Hanoan was bullish on on-chain Forex. Luca was bearish. Sam, I'm curious to hear your opinion on this bear thesis. Robbie, I think you can probably say it better than I can, but I can give it a stab.
Well, I can put it pretty simply. It's that there isn't a lot of liquidity in certain Forex pairs. For instance, you can take two countries with rather esoteric currencies, and they don't have a lot of liquidity between them, so they have to route into the dollar, the US dollar, and then route to that other currency. And he used South American and I think Eastern Asian currency as examples. That of a currency pair that they would have to go from currency A into the dollar and then to currency B. They couldn't go to A to B directly, but we have DeFi, we have AMMs with stable coins and enough liquidity in those assets. It could make more sense to go directly to the second foreign currency rather than routing through the US dollar. And the point here was essentially that this takes an incredible amount of effort to unravel, because there is so much of a moat in the US dollar. And, part of the benefit is that you have all of these flows routing through the US dollar. And it really is this denomination and reserve currency in that aspect. So we heard some conflicting opinions. Some people said that this could happen on chain and it could happen on chain sooner rather than later. Other people think that this is not able to really get unraveled at all. If so, it's going to be a decades-long process. So, Sam, have you thought much, or Rob? Maybe we'll start. Let's start with Sam, and we'll go to Rob.
Yeah, we've actually, because of the KRWQ guys that were helping issue this thing, we actually have an intimate understanding of this, because every single country has their own esoteric like capital controls or sort of capital controls. Like, for example, Korea, like you can't move Korean won into a outside bank account. You need to actually have a local bank to hold Korean won. Now, there's interesting ways around that to create a Korean won stablecoin by holding Korean treasury bills in accounts that are not in Korea. But every country has their own like requirements, and so the US dollar is basically the most free asset in the entire world that basically has connected to all of these as like a literally routing pair, right? And so I think that there's two types of things this says about the structure of the market in non-USD stablecoins. One is it's a winner take all, even more than what people are seeing in the USD market with like Tether and USDC. It is literally there's going to be like just a tether of Korea, a tether of Brazil, or tether of Turkish Lira, because these use cases are extremely important and being like the Korean won routing pair, or the Brazilian Riyal, or the Turkish Lira routing pair. And there isn't a long tail of niche uses for like 1,000 USD stablecoins like there's going to be, right? Like the Klarna USD, this USD, Starbucks USD, this and that. And that's not going to happen with all of these other countries. That's why being first, for example, with KRWQ is so important. They're all going to have on-chain liquidity, and it's just going to be more and more powerful, right? And no one else is going to need or want or should even to create a second Korean won or Turkish lira. And that token, that stablecoin, is going to be so liquid. It's going to be able to trade on chain against other non-USD stablecoins. It's going to be in DeFi, and it's going to become a very consolidating asset. If you think Tether is dominant right now, just wait until like these non-USD stablecoins really get going in 2026, and whoever the current first mover is for each of these units, I'm willing to bet that we can come back in a year, December 2026 from now, and look at the chart, and I will bet 99% dominance of one single issuer for each of these pairs.
Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com 24/7 for the world's biggest prediction market.
YEET is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
I would agree with Sam on that. I think it is really a winner take all scenario, but at the very least winner take most.
DTCC style.
Oh, Jesus Christ. Crypto is meant to solve that. No, to me, I don't see any reason why the on-chain market wouldn't eventually dominate and supplant the off-chain. I definitely don't see any reason why, at the very least, it wouldn't start up. You're going to have a decent amount of flow just because people want to do, like Sam's talking about, basis trade. Who's going to take the other side of that? Well, if someone's doing trade receivables, they're the one taking the other side of that. You have genuine organic demand for the ability to long and short these assets already. And right now, it's having to route through off-chain systems, but a decent amount of the capital flow already comes through on-chain. People will want to make that even more efficient. If you go and you look at one of the other big uses of stables at the moment, it's store of value. I ran into this a decent amount down in Argentina. I ran into it years ago in Colombia. People do not like, at least people in our generation, actually people in the old generation too, they don't like keeping their money, their life savings in their local currency, because their local currency has a bad habit of going under every 5 to 7 years. They don't keep it in their banks. If they kept it in their own currency in their banks, they lose it when the bank goes under. They keep it in cash, in US dollars often, and they keep it under their mattress, which is a really terrible solution. So what you've seen this proliferation of people who are allowing, these normal everyday folks just keep their money in US dollars via whatever app it is, whatever wallet that's hooked up to, a credit card.
Yep.
A debit card. That debit card converts the dollars to the local currency at point of sale, and it's a very easy user experience. Those sorts of systems right now rely on Visa and MasterCard to perform that Forex swap, to perform that conversion. And I don't know the exact fees involved, but I would be willing to bet that Visa and MasterCard are taking a pretty significant cut to do that, as they do with any foreign exchange. The minute you get on-chain liquidity and you can go from USDC that you're keeping your money in, or Tether as it's quite common overseas, to your local stablecoin, then go through your local payment provider to convert it back to your typical currency, you're going to get a lot lower slippage. You're going to have a lot higher efficiency. Yeah. These on-chain Forex pools get flow, so they're very happy. And the only one who loses is the existing giants of the payment processing world.
Yeah, and I think they feel that, and I think they're coming on. Then they're coming around to it. Stripe with Tempo. I think Interactive Brokers is starting to accept stablecoin payments as of today. They can feel it.
They're going to keep taking their cut. It's just going to be
for sure. But I think you bring us to a nice segue here, which is our boy Sam has been recently appointed as a advisor, CTO, shadow founder of Stable. We are investors in Plasma. We were euphoric for the first couple of weeks. We are now the butt joke of crypto Twitter. Tempo's testnet has came out. Stable mainnet launched and token launched. A lot of drama, a lot of people mad about the token and the allocations and the pre-deposits and yada, yada, yada. And then ARK is still kind of like this little, thing in the corner that's just kind of watching it all unfold. Tempo's like the big brother here, and like Stable and Plasma are fighting. Let's talk stable chains, guys. We haven't talked stablecoin chains probably Sam, maybe since like the first episode that we did. I know you have a kind of like, not like a bias, but you have a role. We have a bias. So just putting those out there. But I think let's start with Tempo, and then we'll get to Stable, and then we'll get to Plasma, and we'll get to ARK. Tempo testnet launched. I just can't help but think Tempo is going to mog all these, and that Tempo is coming straight for all of the payments chains, and I'm scared. I'm scared that Tempo is going to come in with Stripe. Their distribution is massive. Their technical team is insane. Their entire fleet of product decisions in terms of their sub blocks, their consensus mechanism, etc., is really, really solid. They will not launch their own stablecoin. They will support a lot of stablecoins, likely including FRX USD. What's our take on Tempo testnet? What do we like? What do we dislike? And then we can get into some of the others.
Yeah. So obviously, let me take as many hats off as possible, as you guys have said, and same thing with probably everyone on this call. I didn't know you guys were investors in Plasma. That's pretty cool. I think there's going to be a lot of these things. I did take a look at Tempo. Testnet Frax is a Frax USD will be an issuance partner. This is all in my opinion, positive sum if people want to play the positive sum game. It's not obviously everyone is bear hugs and things if there isn't a both sides interest. Tempo has some really cool tech. Stable will also unveil their very interesting roadmap that we do think is novel, that no one else will do, and not even Tempo. But Tempo's tech, if you go look at it, the way that the actual payment lanes works, the TIP20 standard and the reward streaming that they've built, and the actual gas market, where in Tempo there's certain things that I actually as like an engineer and like someone that still writes code, I'm very, very intrigued about the decisions that they've made, and I'm excited to see how that goes. Like, for example, there is no ETH payable gas in the EVM in Tempo. I don't know if you guys have looked at it, your listeners. It's super new. It is literally the actual low level call to like pay gas it can be denominated in any preferred stablecoin, or the validator quotes in whatever stablecoin that they want to accept. And like if you load Tempo network on MetaMask or like Rabbi or any of these things, you know how all of the networks, they're like gas, like quoted like tokens as like this ETH balance for your wallet. That doesn't even exist in Tempo, which is really mind blowing. There's no such thing as a single gas like token. And like it is EVM though, right? And so there's so many changes. There obviously, like I'm excited to see stables. We have one with Frax still that has zero gas and things like that for Frax USD and some of these other products that we're building. It's going to come out in Q1. There's just going to be so many. I think the most interesting thing is who gets the actual distribution and the customer base, because that's where all of the flows are. These are things that are monetizing flows rather than AUM, right? Chains monetize flows and settlement. So
Sam, help me understand something. People are fudding stablecoin chains in general and saying, okay, so Plasma set the standard already, saying gasless everything. So there's not going to be any transaction fees on stablecoin transfers. That's going to be probably ubiquitous across all of them. So like the revenue or REV from a typical L1 won't exist. Like you won't be paying ETH fees or SOL fees or L2 fees to use these. So then how do these things make money? Well, it's like, okay, then they can be valued based on volumes, I guess, almost like a settlement layer engine, kind of like a DTCC. Like, does that make sense? Like, how do you think about stable, plasma, tempo, arc? How do you think about these things making money? If they're doing these gasless stablecoin transfers, what metrics should we be paying attention to like measure their success? Obviously, TVL is one. I think Plasma is like top 6 or 7 right now in TVL, but of course they had this massive liquidity, generation event that is now kind of subsided. How do you think about the difference between normal L1s and L2s versus what these things are doing for like metrics to watch and how to value them?
Yeah, I think the true gasless fee transactions, whether it's like stable, plasma, tempos, payment lanes, yada yada yada, they're all limited, right? Like there's no such thing as infinite free transactions. It's literally physically impossible. So I think the most important thing is those are subsidized ways to get more flow into these networks, and some of them are by issuers, like ARC by USDC Circle, right? And so if everyone's using USDC, right, and ARC is super fast and super good and mostly free, not like infinitely free, then basically USDC is and I think in their view, dominating because they are able to monetize the stock, the TVL, the AUM of their stablecoin. And so same thing with the chains that have relationship with Tether, right? If you give a lot of very, very cheap, fast movements of Tether benefits a lot. And it is an interesting question of like, what are the chains doing? I think the chains are literally monetizing flows rather than the stock or the TVL, which is what usually a stablecoin issuer monetizes. And so the relationship between the issuer and the chain team is the most important like answer of like how they're going to make money.
Gotcha.
Very cool. Rob, anything to add there?
Yeah. Personally, I would say my outlook on these chains, it really varies across the different chain, which one we're talking about. Obviously, I am still a fan of Plasma. We are going to be deploying some cross-chain infrastructure in the new year for InfiniFi. And as everyone who's been following us knows, we had planned to deploy to Plasma in November. Obviously, the yield situation there got a little bit, rough in the fallout from the stream incident. So we basically let the dust settle. Plasma still seems to be going just fine. So we're planning to be there sometime in the early new year. And we're also planning to start deploying across some of the other chains that are flying around. That all said, when I think about Plasma, I think about their angle is more of, at least from my perspective, it's more of a neobank one versus when I think about stable, I think about transactions. I think about settlement. I think about more money moving around. Plasma to me is a great way to access the entirety of DeFi. Their selling point is you are looking to deposit into DeFi. You don't know where to start. We can help you. And that's why you have these sort of single point of origin vaults that Plasma just shows right on their homepage. They're selling to a different person than somebody like Stable, who's really looking to engage with these payment processors. And ARC is also taking that exact same tack. Tempo, I mean, they've got, is it Guillaume? The really good, no, it's Dankrad. There we go, Danksharding. They got Dankrad, and I've interacted with Dankrad before. He's brilliant. Long time ago, helped me keep self-destruct from getting totally deprecated, which I was very grateful for my protocol at the time. Would have bricked the entire thing. A really smart guy. But from what I can tell of Tempo, it's the incumbent trying to show up and trying to basically grab market share in something they view as challenging their market dominance. If we look at historical attempts to perform those sorts of operations, usually they don't work out well for the incumbent. There have been entire books written about this. The one that I would recommend most people read is The Innovator's Dilemma. And the general thesis there is that by the time the incumbents realize that a new technology is challenging their hold on power and begin making moves to dominate that technology, it is already too late, and the new winners have already been chosen.
Yes.
Yeah.
Ethereum and Bitcoin coded.
You get it?
Yes.
You can see this with Caterpillar. You can see this with IBM.
Yes.
Like those are just the two first examples I think of. Caterpillar, they crushed everybody who was doing like, cable construction equipment.
Yeah.
IBM, they got crushed by the personal computers. Like, oh, mainframes of the future. What's this PC? Who cares about this?
Yeah.
Dead.
Yeah. Well, I'm looking forward to seeing how this kind of race continues to play out. I think we'll have to continue to monitor the situation. What's that meme? I'm monitoring the situation. Sam, Rob, guys, I think we're coming up on time here. Didn't realize that we had a tight one here today. So, guys, thank you so much for joining. Sam, Rob, it's been a pleasure. Stable Up episode 13. Shout out to the amazing people from the Frax team. Lots to cover in the stablecoin verse. So glad that we can make it happen today.
Thanks, guys. I will keep monitoring.
Monitoring the situation.
Pleasure, guys.